that innovation is part of the program, and especially with Elon Musk at the helm. He has been at the helm. He's going to be stepping aside. I think he has been shocked and has surfaced how old the technology is and how inefficient it is and how much we are doing manually. So I think
at government.
In the government sector.
Hey guys, welcome to Everyday Finance. The CEO and founder of Ark Invest, Cathie Wood, has rekindled market interest with her audacious prediction that Bitcoin could reach a staggering $1.5 million by 2030. Wood reaffirmed Ark's long-standing argument in an interview with CNBC on May 9, 2025. Bitcoin's algorithmic scarcity, limited at 21 million coins, combined with its growing institutional adoption, creates a particularly bullish environment. Even though Bitcoin was trading close to $13,000 when she made her remarks, Ark's modeling shows a convincing range of values, from the aggressive $1.5 million bull scenario to the conservative $700,000 base case. This viewpoint is supported by recent capital flows, not just theory. In just the first quarter of 2025, the approval of spot Bitcoin ETFs attracted over $10 billion in institutional capital. Bitcoin is becoming more and more integrated into traditional finance, as retirement behemoths like Fidelity and Charles Schwab are now enabling crypto access. The assets of ARK's own Bitcoin ETF, ARKB, have grown to approximately $2.2 billion, and their larger portfolios show that they are still accumulating BTC. The distinction between Bitcoin's fixed supply and infinite fiat issuance grows more pronounced as the Federal Reserve keeps growing its balance sheet, supporting the idea that Bitcoin is a long-term store of value and a hedge against monetary devaluation. According to Wood, we are at the forefront of a new monetary paradigm rather than just seeing an asset class mature.
It actually feels a lot better right now than it did at the beginning of so-called Liberation Day, when it seemed chaotic. Our hypothesis at the time was that there was a lot of negotiating going on behind the scenes. And when we saw Treasury Secretary Bessent really take over from Peter Navarro, that was an important moment. We knew the negotiations were perhaps about getting non-tariff trade barriers down, as well as getting tariffs down. And if that is where we end up, that's a tax cut. That's a positive. But as the turmoil was the inferno seemed to be blazing. I know that there was a lot of uncertainty just because of all of the rhetoric, but I think we're beginning to, understand now that this is more of a tax cut and a freeing up of markets. I mean, even here in the UK, I didn't know we couldn't sell our beef into the UK. Now we can, or our ethanol. So, and hopefully it's a two-way street that the U.S. is opening up as well. So it's a win-win for our trade partners. Well, I am a Laffer disciple, so the Laffer curve. And we have some evidence now. In the first Trump term, he cut the corporate tax rate from 35%. We were uncompetitive. A lot of companies were moving out of the United States. 35% to 21%. And of course, that faced a lot of criticism. Corporate tax revenues since then have gone from $200 billion to $500 billion as more companies relocate back into the U.S. We're more competitive now. So if tax rates are too high, then cutting the rates typically leads to more revenue. Now, one of the other things we think is going to happen, and consider the source, there is so much innovation taking place right now, technologically enabled innovation. We think real GDP growth is going to accelerate well beyond what people expect now. So this idea of growing our way out of deficits, many people are dismissing that. I just gave you a very good example with corporate tax rates. And if you look in the United States at revenues as a percent of GDP, individual tax revenues, they're roughly around 18, 17% all the time. If tax rates go higher, people either stop working or find ways to shelter the income. So we think that government spending up closer to 24% is the problem, and we need to continue to show some discipline on that front. I think that innovation is part of the program, and especially with Elon Musk at the helm. He has been at the helm. He's going to be stepping aside. I think he has been shocked and has surfaced how old the technology is and how inefficient it is and how much we are doing manually. So I think
at government.
In the government sector, we've had Palantir go in, starting with the Department of Defense, and now it's moving into other parts of the government and increasing efficiency enormously. We desperately needed this. Some of these systems were 50, 60 years old. And so if we look at the FDA, for example, we're already seeing more transparency and streamlining, which is absolutely essential. Deregulation. Regulations have been strangling innovation in the U.S. The FDA already has approved, for the first time, a piece of software code which will help in the diagnosis of heart disease. Is getting rid of animal testing because it doesn't work when it comes to monoclonal antibodies.
Technically speaking, the chart of Bitcoin is displaying a crucial bullish signal known as the golden cross, a pattern that is frequently seen as an indication of persistent upward momentum. Happens when the 50-day simple moving average, SMA, crosses above the 200-day SMA. The golden cross has long been a trustworthy indicator of rising prices. The expectation of Bitcoin ETF approvals sparked a 45% rally when this signal first surfaced in October 2023. In September 2021, a more than 50% surge was preceded by a similar pattern. Technical traders are looking for possible gains as Bitcoin is expected to replicate this configuration by late May 2025. The crossover occurs when riskier assets seem to be supported by broader macroeconomic conditions. A recent increase in the M2 money supply indicates that the system is becoming more liquid, and a reduction in trade tensions between the United States and China may also improve investor sentiment. If the golden cross works, it might serve as a launching pad for around $150,000, which some analysts believe is within reach in the near future. However, market analysts warn that timing, volume, and outside catalysts are important factors. Not all golden crosses lead to rallies. For the time being, this signal is supporting the bullish narrative that is already emerging in the market's institutional and retail sectors.
Well, the wonderful thing about what's going on with artificial intelligence in particular is that the cost of innovation is collapsing. Our AI training costs are dropping 75% per year. AI inference costs 85 to, if you believe DeepSeek, 95% per year. So we think we are on the lookout for more innovative companies popping up in the rest of the world. I do believe the U.S. was at risk of losing innovation. Certainly under the last SEC chairman, Gensler, we almost lost the digital assets revolution to other countries. Now it's coming back. I think under this regime, technology in the U.S. will do very well. And one other thing I'd like to say about that, the Mag 6, many people lump them as technology and thinking they represent technology. They quintupled in market cap from 2019 to 24. If you look at the rest of what we call technologically enabled innovation, it was up a mere 30%. we believe the market is going in the U.S. is going to broaden out and reward some of the companies that have lagged badly.
Examples? Any examples? Which areas? Give me more specific.
Sure. A lot of the multiomics names, they are AI enabled these days. Multiomics is life sciences. Yep. So CRISPR Therapeutics is curing sickle cell disease and beta thalassemia. We have, of course, Coinbase. It is starting to make a run. Palantir's had a magnificent move, just got into the S&P 500. Roku is the operating system for connected TVs, certainly in the U.S., and number 2 in the U.S., and now spreading around the world. We have other multiomics names like Twist Therapeutics, which is going to be critically important to the blood tests that are going to help us identify cancer in stage 1, or maybe even before stage 1, as tumors shed or polyps shed into the blood. No, we're not certain. We're never certain. Whenever you see a flood of capital moving into one space, which it has, one of the things we think about is software as a service. Internally at Ark, there's something called vibe coding. I don't know if you've heard about it, but we're all coders if you think about it. Natural language processing, vibe code. We can go to ChatGPT or Claude.
Write some code for me.
Yes, and say, build me this website.
Yep.
And it will happen. Or
who makes money on that? We still haven't figured out who's ultimately going to be making the money.
We're going to, because we're going to lower our costs.
Okay.
We're going to lower costs. We're going to eliminate.
But that's not what's priced into the market right now. At the moment.
No, I think the biggest. So there are 3 huge areas. One is massive productivity gains that every company can enjoy. Yeah. That's one, and you'll see that more in efficiencies. 2 is the largest AI project on earth is autonomous transportation, whether it's robo-taxis. So Tesla, we have said for quite some time, is the largest AI project on earth. The most profound AI applications are going to be in healthcare. If you think what makes AI tick, it's data. We have 37 trillion cells in our body that we're now analyzing, and we can analyze because of AI. They've corrected quite a bit.
Sure.
They've corrected quite a bit. I think the better question is, are some of the opportunities I just mentioned, especially in healthcare, are they recognized at all? They are not. They are not recognized at all. We think the healthcare sector has the opportunity here to take returns on R&D, which are in the low single-digit range, way down from the golden age of the 80s and 90s when they got up to 20, 30%, back to 15, 30, even 40%, because AI is going to collapse the cost of drug discovery and development. We think the number of years it will take to discover and then launch a new drug will shrink from 13 years to 8 years. We think that we're going to have molecular diagnostic tests, as I mentioned before, to diagnose disease much earlier. And so we're going to move from sick care spending, which in the U.S. is 85% of healthcare spending, more towards therapies that actually cure. So if you look at CRISPR Therapeutics and others, we think that the combination of sequencing technologies, artificial intelligence, and CRISPR gene editing is going to cure more diseases. We're already seeing cures in sickle cell disease and beta thalassemia, as I mentioned. They have one that will compete with Lipitor or the statins in the works right now, which is showing amazing results. Again, once and done, not having to take statins all your life, which have all of these side effects. So I really think healthcare is the most underappreciated beneficiary of AI out there. But as you mentioned, your viewers have a lot of pharma holdings. You have to make sure that they are harnessing these tools, because the old way of doing things is not going to work anymore. It's very inefficient. There's a lot of guesswork.
Yep.
And technology is going to change that. You have some great pharma companies, but they have to harness these tools aggressively. Otherwise, newbies will come around and nipping at their heels, it will seem like, and then surprise.
Technical and macro indicators are beginning to raise red flags despite the bullish momentum that is developing around Bitcoin. The Relative Strength Index, RSI, a momentum indicator that has recently surpassed the 70 level and is frequently seen as an indication that the asset is overbought and ready for a pullback, is one cause for concern. A growing bearish divergence, which frequently precedes short-term corrections, is making matters worse. Although the price of Bitcoin has increased, its momentum indicators are starting to lag. The approximately $92,400 to $95,000 price range is currently being watched carefully by traders as a possible support area. The bullish narrative may be momentarily derailed if Bitcoin is unable to maintain this level, as it may lead to a surge in profit-taking. Furthermore, even though the recent institutional inflows are encouraging, sentiment could always be stifled by macro shocks or regulatory surprises. For example, risk assets may retreat in response to any hawkish shift by the Federal Reserve or unforeseen geopolitical tensions. Even though Cathie Wood and ARK are unwavering in their long-term beliefs, traders and investors must contend with short-term volatility. Whether the Golden Cross signals a breakout rally or turns out to be just another false dawn in the infamously volatile journey of cryptocurrency will be decided in the coming weeks.